Monday we had that clean CR to fund the government fail. That was the fifth time it was voted on. The government shutdown is likely going to continue. It could get more intense. The last government shutdown, we were in a downtrend and it ended up developing and marking a bottom. At the volatility leading up to the government shutdown, this time we could have it during the government shutdown and do something similar to what Bitcoin did. If you want to see my latest Bitcoin video and all the topping signals that formed today, you can see that linked at the end of this video, which Bitcoin has a positive correlation with the market. They're all hitting major resistance. Just keep your eyes on this issue here with this government shutdown. Again, got these workers, federal workers, furloughed. Could we end up seeing mass layoffs, permanent layoffs, where they don't come back, and a downsizing of the government, Trump ending programs and agencies and shrinking the size of government? Is that coming? Possibly. This could go on for a couple weeks. It went on 35 days the last time. Still think it could be an issue that rattles the market if we end up seeing mass layoffs. Right now, government shut down. People are furloughed. They come back. They get paid. When if that doesn't happen? When if we have layoffs where they don't come back, shrinking of government by the Trump administration, and we start seeing all these jobs lost and go away? The federal government's massive. It employs a lot of people. If Trump does this, Wall Street could be concerned about an already fragile labor market, consumer spending, and the GDP, and possibly concerns about recession. Also, if we start seeing this kind of thing happen and we drag out the government shutdown, we end up seeing it extended longer. Are there concerns about the economy? What happens to yields? Do yields impact the market? Just things I'm looking at, things I'm watching. Pay attention to this issue. Trump talked about today, what he was asked, how many permanent jobs are on the chopping block? Trump said it'd be a lot of jobs that may never come back, but he said we'll know more in 4 or 5 days. That's pushing it into the weekend. Whether the Trump administration waits that long, do we sell off and go back up and form a head and shoulders and then begin to see that play out, or just start seeing a big sell-off this week? But again, this issue could move the market. Now, maybe it's another catalyst that ends up moving the market with the divergences that have set up daily and 60-minute charts. This issue could be it. And again, if Trump does go forward and end up with mass layoffs, how does Wall Street respond to that on concerns about the labor market, the consumer spending, and the GDP? Pay attention to this issue. It could be a market mover. Now Trump is saying 4 or 5 days. Maybe it's sooner than that. Maybe it goes into the weekend. Pay attention. You had Trump's economic advisor say on Monday that we could hear this announcement any day if Trump feels that negotiations to reopen the government are going nowhere, which they are. It's not going to open anytime soon here, so could drag out for weeks. The Dow down almost 92 points, 0.20%. The S&P again losing a 7-day winning streak. The S&P down 26 points, down 0.38%. The Nasdaq down 0.67%. The Russell down 1.12%. The VIX was up. Let me just move that over so you can see it. The VIX was up 5.31%, still holding above that 50-period moving average, currently at 17.25. On the Nasdaq and S&P, if we start losing the 10 and 20-period moving average, signals will begin to turn bearish. Here's the Nasdaq daily. S&P, again, signals have been consistently bullish. We saw them turn bearish briefly at the very beginning of August, and then they turned right back to bullish. Nasdaq had signals bearish at the beginning of August and the middle of August, but again, signals are all bullish in September on into October. Signals remain bullish. If we start moving down, taking out the mid or low 6,600 area, you're going to start seeing a bunch of signals start flipping bearish. It happens this week, next week. Same thing here. Signals still bullish for the S&P. Trending signals, in order to turn, you got to go down and take out the 10 period and some indicators, a 20 period moving average or so, those levels, and you'll start seeing the trend signals begin to turn bearish. Again, S&P signals have been consistently bullish since the April bottom. I'll be watching to see if they turn here off of these resistance levels that I'm talking about in this video. S&P daily. Again, signals on NASDAQ. We saw a few more points of volatility for NASDAQ on different indicators, but again, consistently bullish. We had volatility through the summer, and then the September push higher. Signals remain bullish. They got to turn bearish in order to get a sell-off. You got to take out the 10 and 20 period moving averages in the daily time frame. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, if you like the indicators, please let me know that by supporting the channel. If you follow the link below to take you to a secured site, you can donate any amount you want. If you could take a moment to do that, I would really, really appreciate it. I don't have any sponsors, just a direct relationship with you. I turn the sponsors' offers down because I don't want to sell you a bunch of stuff. That's how most YouTube channels their money. They contact YouTube channels and they try to get you to sell and promote their stuff and send you to their websites. I don't want to sell you anything. If you could just take a moment, do what you can to help out, I would really, really appreciate that. I thank you for your consideration for that. Keep your eye on the VIX. The VIX is turning up. It was up almost 5.5% today. The VIX continues to have the warning signs. The bands have gotten extremely tight, telling us something's going to happen. So far, we've seen the summer sell-offs be pretty mild, and the band continued to remain tight. But it's telling us something's going to happen. We got the MACD above the center line telling us something's about to happen. Last time that happened, you had the February top and a major sell-off, and you dropped 21% on the S&P 500. As you can see, if I scroll down, S&P down here dropped 21% during that time. These two surges in volatility on the VIX here. If we can see a big surge in volatility, get above this trend line, get above the 200 period moving average, you're going to see a big sell-off on the S&P. Now, does that happen immediately, or do we try to form a head and shoulders top on the S&P and NASDAQ on those 60-minute charts that I've talked about? Possibly. But everything's suggesting we're going to see some kind of sell-off. Seasonality is suggesting, oh, we're going to have this great fourth quarter. The seasonality has now played out. We've done the opposite to what the seasonality has suggested. We're no longer following the seasonality. Longer term, for the shorter term, we're not following it. I'll be watching the VIX here, but again, we're holding above the 50. You've got the tight bands. You've got the MACD positive. You got the hollow red candlestick over here with the higher low, just like what we had over here. Had the breakout of the trend line right here, breakout, back test, and we're consolidating. We could be consolidating for a big surge in volatility, or maybe buy a little bit more time if we just go up to the 200 period and then stall there and then a bigger surge in volatility next week. But pay attention to the VIX. The warning signs are there. When the VIX is above 50, the 50-day moving average, that's that green line you see right there. Bad things begin to happen on the S&P. It's holding above the 50, consolidating. That's not good for the S&P 500. Now today, the S&P 500 had a gap and trap on an intraday basis, slamming right into resistance. Yet again, we went slightly higher than the previous peak. We had a slightly push higher back into resistance, and we turned down hard. This is a gap and trap. You gap higher, and then you turn in the other direction. And we have a sell-off taking us below the 200, the 50 drop below the 200 here in the 5-minute time frame. Now you got a triangle. You tried to break out towards the end of the session and back test it. Again, we'll be watching. Can the triangle be a continuation, getting a failed breakout, or a rebound back up? Counter trend if this is in fact a peak. The divergence here played out. Just as the divergence over here played out, you're starting to see distribution into the highs. The triangle could be a continuation or reversal. If it's a reversal, we'll be watching. Do we set up a lower high, moving back towards the 200 or maybe beyond it if we can get above the cloud? Or do we get rejection at the cloud here and it ends up being a continuation pattern with a failed breakout to the upside? If it is a continuation, we could see the MACD roll back over and get a massive divergence with another leg down before we get any kind of meaningful bounce. I'll be watching to see, do we get a meaningful bounce here, or do we continue on lower? Now, holding below the 200 period, we're at risk of still going lower as long as you hold below the 200 period here in the 5-minute time frame. I told you yesterday we had to take out the 200 period if we're going to get a sell-off. Well, today we took out the 200 period moving average here in the 5-minute time frame. We have push higher, giving us this divergence now. Here again, a discrepancy. The Nasdaq had hit a high, but the S&P did not make a new high. Now the S&P is making a new high. Nasdaq went back and went a little bit higher, slammed into the upper boundary of the broadening formation. You got this divergence, and you're turning down. Here you can see again potential triangle, but again we could also end up forming a bear flag type of a pattern if we move back towards the 50 period, move back towards the 200 period. It might evolve into a larger bear flag pattern, something we're paying attention to. You've got to take out the 200 period here if we're going to get a bigger sell-off here in the 15-minute time frame. But you've got these divergences now playing out like we had the divergences over here. Boy, these divergences found support at the 20 period in the daily, the 200 period in the 60-minute time frame. The MACD is negative here in the 15-minute time frame, and you had a multiple point divergence play out at least so far. If we drop below the 200, the 50's got to drop below the 200 to get a bigger drop. When we had that happen over here, it marked a bottom, and we rebounded off support levels. 60-minute chart, you've got a massive multiple point divergence. We had a rising wedge breakdown, loss of 50, tried to bounce off the cloud, and I think I said the 200, it was a cloud. I think I said the 200 a moment ago, tried to bounce off the cloud, got another rising wedge. We broke down, back tested, and we're resting on the 50. You lose the 50, lose the cloud, you're going towards the 200 period, you're going back towards this level right here. You got a possible head and shoulders. If we drop to the 200 period moving average, you've got a possible left shoulder there, head formation here, and then a possible right shoulder if we break the cloud and then come back up to it, and you get a right shoulder. So that pattern is in play at this point. No guarantee it sets up. It's just in play. It's a possibility. If we break the 50, if we break the cloud. The cloud has acted as support since the September low. And then we tried to breach it here. As I said, we found support there. If we lose the cloud, then end up losing the 200, you're going to get a bigger sell-off. But if you try to bounce off the 200, you got a shot at the head and shoulders formation. If we sell off and then you come back up and hit the cloud again. We almost had a bearish engulfing on the daily. We opened higher, we went higher, we got the gap and trap on the intraday charts, but again the open here, the body not completely engulfing the entire candlestick. You are engulfing the real body of the previous day, not the entire candlestick. So at best you have a sloppy bearish engulfing candlestick. You are engulfing the real body of the spinning top, the candle of indecision. But regardless, we had a down day. Here we're closing below that candlestick, so possibly confirming it here. Not a decisive break, but we did break below it and close below it. Again, we'll see if we get a follow through. We had a couple of bearish candlesticks over here. You got a hanging man candlestick. You got a gravestone doji looking kind of a candlestick, candle of indecision, and now a potential reversal bar with art negative divergences that are forming in all the time frames. Zoom out, you can see a massive divergence right here, and here's that bounce that we had the last sell-off at that 20 period in the cloud right here. Massive divergence, likely completed. Going to get a bigger sell-off. Signals have to validate that by turning bearish, taking out the 10 and 20 period, taking out the momentum cloud, start moving down towards the 50, start moving down towards the 100 period and the 200. Lower than that, not seen on this chart. Zoom out here, you can see the divergence here very nicely here in our most recent price action, a larger divergence with these previous peaks over here in July and August. And again, nice rally right up into that trend line right there. And we have the MACD about to get a rollover. The MACD, the stochastic it's still above 80, but the MACD, the histogram has a reading of 3. So if the histogram goes negative yesterday or tomorrow, the MACD will get a bearish crossover and complete the divergence right here in the most recent price action and complete the divergence right there and complete the larger divergence with the previous highs. So again, the market start now getting rattled. Do we find out more information sooner rather than later about possibly mass layoffs? Or is it 4 or 5 days, I should say, like Trump was saying when asked about it today? Or do we hear about it sooner? And if we do, does it rattle markets? We'll be watching. Again, the S&P is in an uptrend going into, as we've started, the government shutdown. Last time around in 2018, it was in a downtrend. So this time it's completely different. This could be something that ends up rattling the markets, or maybe another catalyst. Concerns about recession, or do we start seeing the 10-year yield rise, breaking out of the bullish falling wedge, as I showed you yesterday, and yields rising, start rattling the market? I expect VIX is getting ready to surge, but this is setting up where it's could change our signals here very quickly. My signals remain bullish. You start taking out the 10 and 20 period moving average. You start taking out the cloud momentum cloud of support. Then you can start seeing the signals change and see the diversions play out here. Now, I have been of the opinion that we're going to pull back and get a wave 4. If we get something similar to what we had in July of 2024, just the first sell-off in the Nasdaq's broadening formation, it dropped nearly 16%. S&P at that time dropped 10%. If it does, you're going back to the 200 period moving average. Again, in the blow-off top. We've been in the blow-off top since the April low. Here we're going to complete it here at major resistance, and that is the risk. We get evidence of that, or you get a sell-off and you get one final climax rally, which in the fourth quarter, maybe on into the first quarter, which is what I told you I thought would happen. There is risk, though, that rather than a primary wave completing here, primary wave 3 completing here, this could be primary wave 3 here, 4 and 5 right here as my alternative count if we get evidence of a top. Looking to see if this trend line breaks right here. Also have the trend line back over here from the May low. We also have a little tiny trend line here from these recent highs right here, just under the trend line down from the April low. So different trend lines I'm looking at. Chart of the S&P 500. We slammed up into the trend line from the 2023 low with our log scaling here. Okay, we slammed right up into it and we turned off of it for the last couple of weeks. We also went up to the parallel boundary of the blue line right here, and actually very close or nearly reaching the red trend line connecting this low here from 2020 to 2022. If we exclude the shadow, you've got the 2023 low, and then we've got our low from April from 2025. If we get a reversal, then that channel really is more important than the blue trend line. The red trend lines are more important if we end up topping here. And this is ending the blow off top, which is possible. But I'll show you the blue and the red trend line up close here. And we're turning off that 2023 trend line like clockwork. Bitcoin at major resistance. You've got the S&P at major resistance. You've got the Nasdaq at the 2020 trend line and the upper boundary of that broadening formation at major resistance. Bitcoin's triggering a bunch of sell signals, slamming into the resistance. Bitcoin's still at risk of the 4-year cycle coming to a conclusion here, right here and now. That's possible, but again, I still think there's a very good shot of a good fourth quarter for Bitcoin and the stock market, get a pullback and maybe come back up to these trend lines one more time. But I want to show you these trend lines up close. But before I do that, I want to show you the weekly chart. Let me just switch my label here not to confuse you. The S&P weekly chart here is getting a double sequence count sell signal at the moment. It may change. Getting a 13 count. I warned you about the 13 count the other day. I told you we got a 9 count last week. I told you we had an 8 of a 9. I told you over the weekend we were going to get this 9 count. Last weekend I told you that we were going to complete a 9 count, and it ended up completing that week. We got the 9-9 reversal signal. It was a 9 that marked the bottom over here. Now you've got a possible 13 count. Now the 13 count, if we start getting a big, ugly, nasty red bar this week, and you end up pushing down below the intra-week high from the bar from 2 bars ago, you end up pushing below that, then that 13 goes away. Okay, and then you get the 9 count completing. But you could have a 9-9, maybe a 9-13 here if we don't get dramatic sell-off this week. You got a shot that we get it. Looks like it's already starting here on Bitcoin at major resistance. The market could follow suit with the sell-off that we started today. Just be aware, you got a 9-9, maybe a 9-13. You're slamming into the resistance. You've hit the trend line here of resistance, and you're turning off of it for a couple weeks here in the weekly time frame. The trend line going back to the 2023 low, you just slightly overthrew the trend line, the blue trend line from 2018, and you came right just under a fraction under the red trend line, which is the other parallel boundary that I have touching the lows 2020, 2022, 2023, and 2025. You do have the possibility of a top here. That is possible. I don't want to rule that out. You need to see evidence of that. Be aware that you get that 9-9 signal. Now, I just want to make you aware of this in the daily time frame. Again, we came down here with our last sell-off. We bounced up this trend line for May. We keep bouncing off of it. This is our 6th touch to this trend line. If we include this one right here, again, bouncing off of it and going right back into this trend line of resistance, forming the diversions on the RSI and the Awesome Oscillator in the most recent price action. The Awesome Oscillator's got it just like the RSI. We've got it on the MACD in the most recent price action. Slamming into the trend line from 2023, you're just slightly overthrowing the 2018 trend line and coming up to just under that red trend line. If we turn down and we break this trend line, you come down and you break this trend line, you're going to get a bigger sell-off. The sell-offs so far have been to this trend line, and the sell-offs have been pretty mild through this entire run-up. We're likely going to get something bigger. Either that's going to be a pullback, and then we're going to go make new highs, bigger pullback than what we've seen so far, probably something closer to what we saw with the 10% sell-off in July of 2024, or you're going to try to top at major resistance. We are major resistance in the long-term monthly time frame, but I think we've overthrown it just a little bit. You may top just overthrowing that level, so the risk is that we're topping. I don't know if that's the case. I've been of the opinion that we're still going to go higher, but we've had this push right up into some major resistance levels and that broadening formation that I'm watching on the NASDAQ and on NVIDIA. So I'll be watching, does this trend line break? If we come down and we try to break this trend line, you're looking at the 66.55 area if we try to break it tomorrow, or a little bit higher than that if we take our time in trying to break it. But I'll be watching, does it break here on the S&P daily chart? When that trend line breaks, you're likely going to see a bigger sell-off. Go back and test the February high, maybe 61.50. If you go back towards the 200, you're looking at the 6,000 area. Get something similar to what we had in July of 2024, again, you're looking at going towards 6,000. If we've topped and this is it, then you're looking at going all the way down back to the April low. Eventually, we're going to top. The risk is we're doing it here. I don't know that we're going to do that. I'm not saying we're going to do that. I'm just saying we could do that. About this previously, we were getting bar 8 again over the weekend. I talked about it, and over the last 2 weeks, talking about the 8 and 9 bar on the S&P and the NASDAQ. We've got 9 bar, the 9 bar this week. We've got S&P and NASDAQ with their 9 bars last week. It was a 9 count that marked the bottom in April. Something worth paying attention, especially because the Dow is diverging with the transports. You're getting a Dow theory sell signal. Get a dramatic sell-off. If you close below the bar from 4 weeks ago, this count will not complete, but if we're above the bar from 4 weeks ago on the Dow, 1, 2, 3, 4, you're above bar 5 right there. You're above bar 5, then this count will complete as a perfected sell signal. The count could produce a turn immediately, as this 9 count did, or you can go a little higher, but we're at major resistance levels on the NASDAQ and S&P, so I think you got a good chance that a turn happens either with the 9 count or it fails to complete. We just start turning with bar 8. The Russell weekly chart getting a 9 count along with the Dow. I talked about this previously. It was a 9 count that marked the bottom back over here. Bar 8 also being the count. You got a 13 over here. We went a little bit higher. So again, just pay attention to these counts. They're showing price exhaustion. Getting the 9 counts on the Dow and the Russell this week. Maybe they complete, maybe they don't. We'll be watching. But I close above the bar from 4 weeks ago. S&P and NASDAQ had their 9 counts and are starting to turn off major resistance today. Now, NASDAQ, like the S&P, NASDAQ 100 got the 9 count last week like the S&P, just slightly overthrowing the upper boundary of the 2020 trend line as we have it here on the linear scaling. With the log scaling, you slammed right into it and you turned off of it. So here we're just slightly overthrowing it with our linear scaling. You got a 9 count last week in the weekly time frame, 9 count bottom. Every time we've hit the trend line, you've sold off. You've gotten a count every single time here at 9.9. Here at 13 after the peak, and here at 13.9 before the peak. And again, you've sold off 16%, nearly 26%. I'm just rounding with those numbers. It was just under those levels. And here, again, you're probably going to see something like that. If the NASDAQ drops as much as it did over here, you're looking at going down beyond the 200 period moving average in the daily time frame. So you got a 9 count here. Last week, just like the S&P 500, went a little bit higher, gapped up, and turned down today, just like the S&P 500 did on its 15-minute chart. NASDAQ just slightly overthrowing that trend line here with our linear scaling from the 2020 low. And here it was support, and then we broke it. Here it was resistance, and we got rejection and sharp sell-offs. You're likely going to see another one. And then we have that massive broadening formation. Bitcoin's turning off a major trend line from 2017 and its 2021 peaks. Turning down. NASDAQ struggling here at this trend line from 2020 and the upper boundary of our broadening formation from our recent highs. The S&P, the resistance levels from 2018 and the 2023 low. All hitting major resistance. Now, maybe we pull back and we go higher. There is risk of a top. I'm not saying we have a top. I'm saying we could have a top if presented with more evidence. NASDAQ gapped higher here on the 15-minute chart. You can see, again, we added to that divergence, and then we sold off, and we broke down from this rising wedge. Had a rising wedge over here, got an overthrow, broke down, but then we rebounded back up. Now you've got another one and another divergence here in play. 15-minute chart here, and the divergence on the MACD as well. Right now, if we back test this trend line and we get rejection at the 50 period in the cloud, you take out the 200, you'll end up getting a bigger sell-off. The push higher formed the divergence on the daily chart with the RSI and on the awesome oscillator. NASDAQ 100 down 0.55%, down 139 points today. Again, this divergence playing out, pushed right up into it again, the trend lines here, and then turned down. NASDAQ 60-minute chart resting on the 50 period like the S&P. You take out the 50, you take out the cloud, you got to come down here, take out the 200 to get a bigger sell-off. Again, possible head and shoulders formation on NASDAQ as well as S&P. Possible head and shoulders formation if we sell off to these 200 period moving averages, come back up to the cloud and turn down. So pay attention to that possibility. No guarantee that pattern sets up, but it is in play if we sell off further back to our lows here from late September. For the balance of the week, this pattern may end up setting up. If we sell off further, we come down to the 200 period, try to bounce, and we close the week out this way ahead of possibly getting Trump's announcement by the weekend, then that may allow the Dow and the Russell to complete their 9 counts in the weekly time frame and possible head and shoulder formations here. We'll see what happens. NASDAQ 60-minute chart, and possible primary wave 4. Possible that we are completing a top, though, if we get evidence of that with this next sell-off. There's a divergence up close right here on the RSI. You've got this larger rising wedge right now. We're turning off of this area here. So again, we'll be watching. Do we come down, take out the trend line? Do we take out the 50 in the cloud? If you do, you have your 200 period down here. If we get something similar to what we had happen in July of 2024, you're moving down beyond the 200 period moving average. We'll be watching the Fibonacci retracements as well. Try to bring those up in tomorrow's video. Have this larger rising wedge and these divergences in play, and possibly again getting a sloppy bearish engulfing. We engulfed the candle from the high to the low, but the real body is not completely engulfing the doji from yesterday. And again, you've got this divergence in play here on the daily chart of the NASDAQ. MACD is probably going to roll over here this week here. It's sure looking like the divergence is done there. As we're popping up a little slightly higher, we're slamming up into that getting the gap and trap today. We're slamming up into that upper boundary of the broadening formation. And here it is. Again, we hit it yesterday. We hit it again today, just slamming up into that trend line. And again, each time you hit this trend line, you get a massive sell-off. We're likely going to see it. Now, maybe we get it. It's a 200 period, something bigger than what we've seen so far. August sell-off was 4.28%. We're likely going to see something bigger than that. Probably something at least or close to this, I should say, that we had in 2024 over here. Risk is that we're peaking and that we're topping and that we have a 1, 2, this is a 3 and a 4, and this is a 5, and it's done. Still think you got a good shot at coming up here, but I'm open-minded to this. If we see Bitcoin in the 4-year cycle, it's likely the market, the NASDAQ, will peak with it as they did back in 2021 together, and they bottomed together back in April. Again, so I've marked top right here or top over here. I am still of the opinion we're going to see a good fourth quarter, but I could be wrong about that. You could see this massive broadening formation as well as I can. The risk is that we're topping, and this is the completion of the blow-off top, and then we start a major reversal. If we see that happen, we got to see. If we do have a top, we got to see evidence of that.